Let's get right to the floor show. Joining me now, Deutsche Bank Chief Global Strategist Bankim Chadha and Oppenheimer Chief Investment Strategist John Stoltzfus. John, we got a dead heat in this election. Neither side owns the win. They don't own the finish line. If you look at all of the polls right now, what does that foretell for the markets? What are you bracing for? What should investors be bracing for?
Well, I tell you, Liz, first of all, it's great to be on Fox Business News with you.
Thank you.
The other thing is, I'm rather relaxed about this, and I think our clients in many ways are. If we look at the historical reference point on something like this, there's not a heck of a lot we can do except wait until we see the results. But the market tends to have a relief rally in situations like this, once there's at least a decision is known which way the votes have gone. And I think the most important thing, everybody wants to know who's going to be elected president, but I think it's very important that we see a divided Congress so that we get checks and balances in the system either way. And that, I think, gives a healthier election result for the market to consider.
So if tomorrow night, even in the middle of the night, we don't have an answer, and then Wednesday morning, there's no answer, you don't think the markets are going to go haywire? Because that's what we hear. And that brings me to the investor who's watching right now. Should they hold tight?
I think, Liz, I think there's fear and greed in the market, and that tends to be in the area of the trading floors and the trading rooms and the day traders. There's a lot of need investors here, and they're the pension plans, they're the people with saving for a kid's retirement, looking for their retirement, a kid's education, what have you. Yeah. The intermediate to longer term tells us the markets abide with the results, particularly if we get divided Congress. But I think there's no doubt about it. There's incredible stress here. This has been a very tough election, very tight coming in here. But I think on Main Street, the tension's much worse, really, than on Wall Street, if we want to look at it from an intermediate point of view.
Well, let's bring in Bankim, the man on Wall Street, Deutsche Bank. Bankim, investors have been barreling toward this election, buying equities. The equity flows, meaning people scooping up stocks leading into this election, several months, rewind the clock, has been much higher. If you look at the charts that you provided us, you have been watching this. They have been barreling into equities at a way faster pace than the previous elections, 2016 Trump, 2020 Biden, Obama 2012. You see that green line is what we see now. Now, you could see that after the decision, sure, a lot of people started buying stocks, but we're not at the decision yet.
That is exactly right. What I would say is this election is, or the lead up to this election is very unusual by historical standards. We, typically the market buys protection for the reasons that you talked about. It has been buying protection. If you look at the implied vol curve, you can see the premiums. They're comparable to the last two elections. But that buying of protection, which is negative for the market, has essentially been overwhelmed by the chart that you just put up, which is very, very robust equity inflows.
Okay. Are you saying that people who are heavy equities might be in for at least a short-term jolt?
So typically, once you get a clean result, that uncertainty premium starts to come out and the equity market rallies and independent of who wins, and that frustrates a lot of people that I'm talking to. But it's about an uncertainty risk premium and the uncertainty risk premium coming out. So if the period of time for which things are not resolved, the experience with that is that the market will sell off, but there's no reason to sort of believe that it will be huge or enormous. I mean, it always does depend on the actual developments. But I think that most people in the market are looking for it to take a few days.
We've got a live picture here of Kamala Harris, of course, the vice president, just arriving in Allentown, Pennsylvania. John, she is going to, at least today, have her feet firmly placed in Pennsylvania. She's not jumping around. Donald Trump is. As we put up the markets here once again, intraday, you really can't tell much, but what would you be looking at for either side? Where should people be adding stocks if you take out this one won or this one lost?
We remain very much favoring cyclicals over defensive sectors. And if we look at the performance of the market this year, the cyclicals, those that are most sensitive to the economy, have been the outperformers versus the defensive stocks or the defensive sectors. We would have to think in this case the U.S. at around a $28 trillion economy powered by innovation and needs of the individual investor who now rivals the institutional investor in terms of influence in the market.
So you like infotech, communication services.
Infotech, communication services, industrials, financials, and consumer discretionary.
Okay, all right. Well, here's communications. The S&P over the past 3 months, XLC, it's looked pretty healthy here. Maybe we stretch it out over the past year to date, and you can see even consumer discretionary. That's a surprise, up 9%, even as people are concerned about the economy. But Binky, overall, at Deutsche Bank, what is the sense of where the markets go for the rest of the year, considering we've got the Federal Reserve meeting on Thursday?
That's right. So it's another source of uncertainty. So both should get settled this week. If you look at implied vols across all asset classes, they're extremely elevated. And it looks big in equities, but in rates, it's a lot worse, or the gap is a lot wider. I think in equities, the relationship is pretty clear. Vol comes down and the market goes up. I mean, and the new fast money of the world is, of course, systematic strategies. So they're not going to sit and debate. If vol moves down, they will buy the market. That's their rule. And that should help the market. Other asset classes, I think it's more debatable. For example, in rates, 10-year bond yield's gone up and rates vol has gone up at the same time. So what happens if rates vol
10-year yields are actually diving right now off their 4-month highs. They went, I believe, down below about 4.3%, below 4.3% earlier. So that is certainly a message here. Now it's 4.318, but they had closed at 4.4, I think, back on Friday. It's great to see both of you. Thank you very much.
Thank you.
I mean, folks, listen, you're getting the message here that you got to just sit tight, wait to see what happens, especially if you are a medium or longer term investor.